Hey everybody, what's going on? It's James here with Crypto Common Sense, and I have your Bitcoin/cryptocurrency update for Sunday, April the 26th. Really, this is for the 27th because it's going to be, rolling over midnight here, about half an hour in my time, and the market itself is already, rolled over into the 27th. But before I jump into the content today, please do me a huge favor. Hit the thumbs up button on this video. Go ahead and subscribe to the channel. And make sure to check the description for a link where you can join the Patron for just $4.95 a month. That helps support the channel and also gives you access to more frequent updates. So it was a fairly big day for Bitcoin. There's a lot of movement in the market today, and I missed most of it. I was actually in bed. I didn't go to bed till almost 3 o'clock. I was actually, at my desk until about noon, and then I went and hung out with family and then finally crashed out. So when I got up, it was a little after 9, had dinner, hung out a little bit, sat down and thought, wow, big day, right? So I want to talk about that. I want to talk about what I believe is coming next. I want to talk about the macro picture. I talked about a lot of these things yesterday, but I want to go to a little bit more detail, look at a couple of different charts today, and kind of offer some more insight into the market. So the first thing I want to talk about is let's go over to a daily chart. And this is a daily chart here. And guys, I want to tell you, I'm going to point this out right now. I briefly touched on this yesterday, but I was a little bit forgiving because I wanted to make sure it wasn't just a case where, yesterday it had given a buy signal and then it changed back to a green dot down here in these hash ribbons. And I thought, well, maybe it was just because, it was, based on the close. No, these hash ribbons are absolutely worthless, okay? And I'm going to tell you why. Because yesterday, these were all green dots, right? There was no buy signal. First there was, and then it went back and they were all green. And again, that could have been a case of where, okay, well, it switched, so when it closed green. But now, the hash ribbons are saying that they gave a buy signal back on April 25th, and that's nonsense. They didn't. In yesterday's video, you could see that there was no buy signal on the 25th. Okay, they were all green. What that means is these are changing after the fact. Okay, so when you look back in history and you see these say buy, and it's like, wow, it was almost perfect on, I could have bought there and made money. Yeah, but you don't really know if it said buy that day or if it was like a week later that it went back and changed to a buy signal. So what that means, hash ribbons, worthless. Absolutely worthless. Okay, so I'm going to take those off the chart and we can stop talking about hash ribbons. As far as the daily chart goes, we are still inside of the same rising wedge that I talked about in yesterday's video. All right, the price action itself still inside that wedge, and the RSI is still inside of that wedge. We had a little false break right here, but we're still inside of this wedge, and we seem to be reaching the top of it on RSI. Now, I don't believe it's a coincidence that we also happen to be creeping up to this 200-day moving average, which is currently sitting at $7,977, and the 61.8 Fibonacci level is at $7,976. So these are now in perfect alignment, and they happen to line up almost perfectly with the top of the rising wedge on price action. So what I expect is, we could potentially get a wick that comes up to tag the top of that, makes it look like it's breaking out of this, and then it comes back down and closes inside of it. That's what I'll be watching for, okay? As far as volume goes, volume is telling a very telling story. Yes, we have had an extremely nice counter trend rally. If you traded this thing, hopefully you've taken some profits, or hopefully you've stuck to whatever trade plan that you set for yourself. If so, you probably did very well, right? This is actually now up from tail to wick, okay? So from the low at 38.58 to the high on yesterday's candle, it actually pumped up over 100%. Bitcoin more than doubled. Really nice counter rally, came right back up to this old level here, before this was basically support, and then it collapsed. So we just came up and tested support from underneath so far. So, like I said, really nice rally. Absolutely can't fault anybody for trading that. If you did, congratulations. That's awesome. Okay, but as we look at this, price is moving up. It's in a rising wedge. That's a bearish pattern. It's coming up to the 200-day moving average. It's coming up to the golden pocket on the short zone. And more importantly, volume continues to decline. Just more and more and more and more decline. Or I guess I could say less and less and less volume, okay? Every day is smaller than the previous day, okay? Not literally, I mean some days like this spiked above the previous day, but you get what I'm saying. Overall, we can see this downtrend of volume. Downtrending volume, rising price, signals that the trend is coming to an end, okay? So we're definitely in an uptrend on the daily. We are in an uptrend on the 3-day chart. On the weekly chart, we're still in a downtrend, okay? I'll talk about that in just a second. I'm still not interested in buying Bitcoin with the intention of holding it long term. All right. Other than scalp trades, I'm not interested in any type of swing trades either at this point. I will start hunting for shorts if we can get up to that golden pocket, or if a nice setup comes in before then, I could potentially find a short as well. But just patiently waiting, right? Which I think I talked about yesterday. That's the majority of what I do is wait, right? So that's what I'm seeing there. It's, obviously it's a little bit frustrating if you're a bear and you want to be in a trade all the time. Waiting is tough, but that's the name of the game. If we take a look at the 3-day chart, like I said a few days ago, this yellow line, I feel like it's basically played out at this point. It did act as resistance back here. We had this clean break above it a few days ago, about a week ago. And so I said the next line that I was interested in would be the top of the bear market box, which is this red line here. And we're now sitting at the top of this. So we have a new 3-day candle that just opened about 4 or 5 hours ago. So we'll have to see where that closes at. This last one closed just under the red line. Okay. So again, this could be the point where this turns south. We really don't know yet. Obviously. It's like, really, we don't know yet. Thank you, Captain Obvious. This was that old level of support all through here back in October. We're testing it there. So looks like a bearish retest, but something could change. Again, even on the 3-day, it's very clear that the volume is declining. If we jump over to a weekly chart, again, I had the hash ribbons on there watching. Now they're signaling a buy signal. Okay, don't trust these. I do not trust these things. I wouldn't trade these if you paid me. Okay, telling me to buy at resistance is silly at best. Okay, doesn't mean it can't go up, but historically speaking and statistically speaking, if you long resistance and short support, you're probably going to lose money over the long term. Okay, Bitcoin has obviously surprised me some with the fact that it didn't even have a small pullback on this run up. It's just printing green candle after green candle. We've now had 6 green candles in a row, and those have closed. So we're now entering our 7th week here of this rally. That definitely did surprise me some, because I thought we'd at least have like a little stutter candle, something like this here, and we didn't get that. But it's really not that different when you really stop and think about it. I mean, we had the stutter candle, but for the most part, this was about, an 8-week rally, right? From the bottom here in December to the top there in February, it rallied for about 8 weeks, and this was a counter trend rally. And this one, we've been rallying now, we're just now entering the 7th week, okay? Or I guess technically the 7th green candle, okay? But yeah, it's not really all that different from this right here. On a weekly chart, I still view this as a definitive downtrend, okay? Meaning that we have moved down. This looks like a counter rally, and to me, I just still expect this to end up with the lightning bolt type pattern, right? Lower high, lower low. And again, what would have made me, consider this, I always try to consider everything, but what would have made me lean more toward this being the bottom, because I really like this capitulation tail. I talked about this when it happened, that, that tail is exactly what I was looking for back here that never came. But what would have made me more bullish is if this had went up a couple of weeks, pulled back a week, went up a couple of weeks, pulled back a week, and started putting in bullish structure. But instead, it just looks like an impulsive, like a reactive move to the severity of this dump, right? Oh my God, look at dump. So then you have people trying to buy the bottom, you get the dead cat bounce, and then you get those people taking profits and more downside, okay? The halving is coming up in May. I don't know exactly what day. I really don't pay that much attention to it. I think it's like maybe 3 weeks out from now. So I went ahead and Googled it to make sure that I had the right date. It looks like it's 15 days away. All right, the halving is in 15 days. So I do think part of this, I think the majority of this is just a reaction to the severity of the drop. It's a reaction to the fact that the Fed, pumped the stock market. So Bitcoin is moving up with stocks. I'll show you that in just a few minutes, real quickly. But I also do think that some of this is probably being fueled by the fact that traders, not hodlers, but traders are attempting to buy the rumor, sell the news. Okay. So it's not so much that I think people are like, oh, the halving is coming up, I'm going to buy Bitcoin and hold it. I just think that most traders know that before the halving, Bitcoin has a history of pumping, right? Like back here in 2016, the halving was July 9th, right? So it was right here. It pumped up before that, and then of course it dumped, right? Litecoin did the exact same thing. And in fact, last year I had done videos saying that I thought Litecoin would go back to $40 right around the time of its halving. I was doing those videos saying, look, I've sold my Litecoin, I've taken profits on my Litecoin because I think it's going back to 40 bucks. And I know a lot of people are like, you're freaking nuts. The halving just happened. We're going to $200. We're going to this. We're going to that. You just, sold your coins at a discount, all that kind of stuff. And then, of course, we all know what happened. Litecoin went back to $40. In fact, Litecoin fell, I think, to $25, if I remember correctly, right? So it fell even further than what I was really expecting it to fall. 25, when I had done the video saying 40, I said, it's possible, but I don't think it's going to happen. I think 40 is probably going to be about it, 30 to 40. And yeah, it went to 25, right? But all those people that bought on that halving pump, where it pumped up from, $22 all the way up to $146, now they're left holding a bag that they're down, 60, 70% on. So I think Bitcoin's going to play out in a similar fashion. I think that, people will dump their coins after the halving. It'll be a sell the news type of deal, and I think that we'll, move back down. All right. So I had talked about the possibility. I had shown a chart from the BLX showing how, and guys, I apologize for the weird gaps and stuff. I got some weird thing going on with I got congestion in my chest and my sinuses, but been going on over a month now. It's really getting old. But when I showed that chart on BLX, I had shown how in 2015 it had come down, hit the 200 week, moved off of it, came down, retested it, and then went on a bull run. And the one thing that it is important to note is I only showed that chart because I wanted to give a counter argument to my bearishness. I wanted people to be aware that, there's absolutely counter arguments out there that are legit and valid. The reason that I don't believe that's what's happening is really has to do with the volume, right? We have very weak volume on this rally versus those rallies in 2015, the volume was growing. So it is worth noting there is some key differences there. So, again, remember this 19-week moving average has been very, very accurate in predicting movements in the market. When we get too far away from it, we tend to come back to it. It's currently sitting at 78.66, and of course the high so far this week, which is 4 or 5 hours old, is 78.10. Okay, so that's what I'm saying on the weekly. That's what I'm saying on the 3-day. That's what I'm saying on the daily. What I want to do is I want to jump over to the total market cap. And, this has been one heck of a rally. If you look at these monthly candles, where it had this huge capitulation tail, and now we've got this big move up. So it is hard to ignore that. But if we put this on a weekly chart, I want you to remember, put my stuff back on there. This is what happened. I had done a video on this right around the time it happened, right? So we had the move up in 2019 to 388 billion. We had the dump in December, and then we had the pump. Once that golden pocket was reached, it acted like cliche market behavior, and people took profits. Shorts started opening up, and the market dumped, right? So you can get those huge rallies right in that golden pocket. And now if we draw from the top at 306 billion down to the bottom at 108 billion, our golden pocket's sitting right around 230 billion. Shouldn't be any surprise considering Bitcoin's also trying to come up to its golden pocket. So again, this looks like a counter rally that's doomed to fail. Okay, a lot of that is going to depend on the stock market as well. If the stock market suddenly starts screaming up, I do think Bitcoin will scream up with it. I think Bitcoin could enjoy another bull run. But if the stock market crashes, like I believe it's going to, then I don't think Bitcoin has any chance to disconnect, or decouple from stocks. I'm not looking for that to happen. And I know some people have said, James, I think we're going to go to a digital currency. In fact, multiple people have said that. And I just want to be very clear. I agree. I do think the world is going to move toward a digital currency. I think that COVID-19 will be one of the big scapegoats or the big excuses where they'll come out and say, money is dirty, paper money spreads germs, and this and this and this. And they'll kind of use that as a narrative to help, get people used to the idea of digital currency. I just don't believe the digital currency that's going to be the, end all be all will be Bitcoin. That's not what I believe. I don't believe that any government will willingly give up control over its population, and they control their populations through money. That's how they can maintain control. If you give up the control of money, you give up control of your population. So, and people will say, James, the governments can't stop Bitcoin. It's bigger than that. It's decentralized. First of all, they can stop it. It's not bigger than that. They can absolutely stop it. They can make it illegal to trade Bitcoin. They can make it illegal for these exchanges to be in business, et cetera, et cetera, et cetera. And no, you won't stop everybody. There will still be those people that say, I don't care about the law. I'm going to do what I want. But they're going to be a very small segment of the population. And it's going to go back to kind of a backroom type of deal the way it was in its early days when most people didn't even know what Bitcoin was, when it was trading for a few cents, right? It is not going to be the go-to currency when most people know they can go to jail for trading it. It's just not going to happen. So yes, governments can stop Bitcoin if they choose to do so. All right. That being said, I don't necessarily think they need to stop Bitcoin or need to do anything to stop it, because I think the CME has done a wonderful job of stopping it, right? Ever since the CME started trading Bitcoin futures back in December of 2017, they have kept an iron grip on this market. And if you don't believe that, well, we'll just have to agree to disagree, because the charts support the idea that it's CME driving this thing, that it's not, Joe Blow retail trader. Okay. So we'll take a look at that in a second as well. But, the CME has basically done a really good job of taking money. People keep saying, oh, there's more whales than ever. Well, of course there is, because that's what markets do. Smart money takes dumb money to the woodshed, and it takes their money. It's the same reason if you go sit down at a poker table, eventually at the end of the night, the best players have all the chips and the worst players have nothing. That's how markets work. The best traders take all the money. The worst traders lose all their money. Period. Okay? It's just one big casino game. So that's kind of, what I'm seeing on the total market cap. It just looks like another counter trend rally before further downside. And if we take off these Fibonacci levels and take off my short zone there, because that's obviously played out. And if we do draw this as one rally, okay, from the top here down, and if we draw this as our pullback, and I think it'll go a little higher than this possibly before going lower if it does go lower. But let's just say for right now, that's our pullback. That gives us a target down around 23 billion, okay, if we're using a non-log chart. And realistically speaking, while that sounds absurd, it's not impossible, guys. It really isn't. Look at this. That's the old level of resistance that was never retested. Do you see this? It never came down and retested that level. So, am I freaking out about it? Not really. See that? I mean, it's perfect. But, I want to be aware that it's possible, because if we're talking about 23 billion total market cap, we're talking about a 90% drop from where price is at right now, right? We're talking about most of these altcoins going to zero, which is what a lot of people believe should happen, right? And we're talking about Bitcoin basically starting over, okay? So if you're talking about a 90% drop, I don't think that Bitcoin itself would drop 90%. I think what we would see is a lot of altcoins die, because this is a total market cap chart. Okay, I think Bitcoin could pull back, 60, 70, 80%, right? I don't know what Bitcoin, where that would put Bitcoin. Let's look real quick. It's a futures chart, and that's a futures chart, and that's a CME chart. Jeez Louise, I just want to get a chart up here. All right. So if this fell down, say, to like 1,300, okay, that'd be about an 82% drop, okay? And I think the rest of that percentage would be made up by alts. Alts would drop equally with it, and then some alts would go to zero, and that's how you get like a 90% drop. And that would put us down around 23 billion, down at these old levels. And, your question might be, well, does that mean Bitcoin is dead? No, I would be buying Bitcoin at that level. I would absolutely be buying Bitcoin. Would I be putting my life savings into it? No, but I wouldn't put my life savings into it at any point, right? I saw someone the other day on Twitter saying, Jack Dorsey's investing in Bitcoin. What does he know that you don't, or something like that? It's like, Jack Dorsey is a billionaire and he's investing $10,000 a week. If you do the math, it's an extremely small percentage of his overall net worth, right? So if somebody came to me and said, James, do you think it's a good idea to put in 1% of my net worth into Bitcoin? First of all, I'd have to say I'm not a financial advisor. You got to do whatever's good for you. But I wouldn't be like, oh my God, you're stupid, right? 1%? Sure, right? What's wrong with taking a punt on 1%? But the problem is most people in this market are younger people, right? So 1% of their net worth is jack squat, right? If your net worth is 10 grand, 1% is $100, and everybody's like, oh, I can't get rich on $100. Well, of course not, right? But it's not a lottery. You're not playing a lottery ticket. If you're a little bit older and you've worked and you've put money back and stuff, maybe your net worth is $1 million, and then 1% is 10 grand, right? And of course, 1% at 10 grand would be like a Bitcoin and a half. Do I think somebody would be crazy for doing that? No, because it's appropriate risk management. It's like me. I always tell you guys I have that small hedge fund, right, where I have a little bit of Bitcoin set to the side in case this thing does go squirrely and just go crazy one day, right? But I also have that because I use it to trade. Now the caveat is, let's say that I'm trading, and let's say that I take a losing trade and I lose, just for easy math, let's say that I lose 0.1 Bitcoin on the trade, right? Well, then I go buy 0.1 Bitcoin back to replace what I lost. I don't just lose it and not buy it back. I do try to maintain at least some Bitcoin in case I'm wrong, right? I don't think there's anything wrong with that. That's just my opinion. But this is a legit target. It absolutely could go there. I know it seems ridiculous. Like, no, that would never happen. But again, when we talk about, the other charts, when we talk about the other markets, for example, and I don't want to beat a dead horse because I've talked about this in several videos now, but when we do look at the Dow Jones and we do look at historical performance of this thing, right, it is concerning to me that we are looking so similar to, the Great Depression type of crash, which of course, marked a 90% drawdown from the top to the bottom, okay, or 89.44% it's saying, right at 90%. So if we do get a 90% pullback from our all-time high on the Dow Jones, that's going to put this thing down around like 2,800. I think it would be almost unimaginable for Bitcoin not to have a severe crash with that. Okay. Now, if they manage to get the economy back on track, great, right? Maybe this thing will just go back up, because you do have to realize that just because this put in a lower low doesn't guarantee that it's going to put in a lower high and keep going down, right? If you look right here in well, this is a bad example because this was actually the last crash. But if you look in 2018, right here. So here's your high, here's your higher low, your higher high, boom, lower low. So a lot of people were thinking this would also put in a lower high and then start the downtrend. Instead, it went up another level, okay? And I think that was simply a case of markets can stay irrational longer than you can stay solvent, okay? I do think this was where it probably should have crashed, but I think they were able to prop it up and it went another leg higher, crushed a lot of short positions, okay? I wasn't short here. I wasn't even trading stocks in 2018, right? I bought a few stocks and whatnot, but I wasn't trading them actively until May or April of 2019. So, it could be another fake out for sure. I don't think that's what's going to happen, though. And I'll tell you why I don't think that right now, guys. This chart is what concerns me more than anything on the Bitcoin chart and more than anything on the Dow Jones chart. This is what concerns me, right? These are the numbers from March. Basically, unemployment went up to like 4.4%, okay? So you see this huge uptick in unemployment. And I saw an article the other day that was saying that it was going up even more. In fact, somebody linked an article that said something similar. It's over here on fortune.com. It says real unemployment rate has soared past 20% and the U.S. has lost 26.5 million jobs. Okay? A lot of people, when they first get unemployed, they have some savings. It might not be a lot, but you're not going to see that impact right away because they might have a few $1,000s put back, or they might have a car that's paid for that they can sell to at least live off of. They might have some kind of emergency fund put back. But the longer this goes on, right, and it takes a while for economies to recover, even if COVID-19, even if we're turning the corner on that, which I don't know that we are yet, but even if we're turning the corner on that, this is like a lagging reaction, right? First off, this happens and you're not seeing it in the markets. Then when it does show up in the markets, it's going to take a while for this to turn around, and it's going to take a while for the market to react to that turnaround. We could be looking at, years of recovery from this economic shutdown. Okay. And again, I don't want to get back and forth on whether it was the right decision or the wrong decision. I think there was pros and cons. I don't like the way it was handled, but that's just me. But it doesn't matter what I think or what I like or what I agree with or don't agree with. The bottom line is, it is what it is. The economies were shut down. People were forced to close their businesses. People did lose employees. People did lose their jobs, etc. And I do think that we'll see that show itself in the markets, right? So if this, again, goes down, I don't know how you can be long on Bitcoin if you're short stocks, okay? Video's getting a little bit long here, so let me jump over to the CME. This is the CME chart. The CME chart, the wedge is not as clean on RSI. The wedge looked like this, and to me it actually looks like it might have broke out of the wedge here. And on the price, it's the price isn't really lining up with RSI the way it does on spot or futures contracts on the exchanges that are open 7 days a week, right? Because of the gaps, it makes things a little bit wonky. So, I'm going to trust the price action more than I am the RSI on something like the CME. And if you look at the price action, I think this is the wedge we're in. I think this wedge actually goes all the way back to March 13th, which is different from the spot wedge. Spot wedge really started around March 16th, okay? But on the futures, on the CME, where did my chart go? I think it started really on the actual drop. I think this is the wedge we're in. And it's the same story if you look at volume. The volume is horrendous, right? And you might be thinking, the CME doesn't trade as much. That's nonsense. Look. Okay, well, that was supposed to be a circle. Look at all that massive volume right there, right? And now you have this. Not a good sign. Not a good sign at all, okay? So, somebody had asked me, hey, James, do you just not trade alts or what's the deal? I really don't trade alts in a bear market. I've talked about this a little bit in the past, but I know different people join the channel at different times. The problem with alts is usually when I was trading alts, I was trading Bitcoin pairs. And so, for example, in 2018, I was trading mostly alts, but I was trading Bitcoin pairs. So I was, doing what they call stacking sats, because I thought Bitcoin would just, keep going up, right? Even if it crashed, like, it's no big deal. It'll eventually go back up. I was kind of like in that mindset, which is just a silly way to think about things. And so I was, doing all this work, going through all this stress. And if I traded, what would happen is I would trade, like, let's just say, for example, I would trade a Bitcoin pair, like, say, Bitcoin OMG, okay? So I would make money when Bitcoin was worth, let's say, for a nice round number, 10 grand. So then I would have to pay taxes on whatever that Bitcoin was worth at 10 grand. Okay. So let's say that I made $1,000 worth of Bitcoin at 10 grand. Okay. So I have a tax liability for $1,000. Well, then those alts, Bitcoin crashed. And by the end of the year, that Bitcoin that I was paying taxes on, that was worth quote unquote $1,000, well, it was down to 3,200. So I actually owed more in taxes than the Bitcoin was even worth. Right. So it really, really screwed me because of the way the taxes work. So that's the reason that I'm not interested in trading Bitcoin pairs in a bear market. I'm just not. Because you have to move, you have to take your fiat, buy Bitcoin, buy the alt pair, sell the alt pair for Bitcoin, then sell the Bitcoin for fiat. You've got double the fees. It's just a lot of headache, and I'm just not interested in it, right? I can make a full-time living just trading Bitcoin, just trading futures contracts. Right? So why stress myself out with 100 different charts? But if we are looking at, this is the total market cap for altcoins, it's the same deal, right? It was up to 141 billion. It dropped down in December. People thought this was the bottom. It ran up. Right here was its golden pocket. It threw a wick up above it, but then it did what you would expect. It crashed, right? So if we draw a new Fibonacci level, oops. If we draw a new fib level from this high to this low, we're currently sitting right around the 50% retracement level. Our golden pocket is up here around 85 billion. Okay, so it'll be right. Well, if I get the magnet to stop getting squirrely, right through here. Will it get there? I would be surprised if alts get there. I wouldn't expect that, but you know, anything is possible. Let's look at dominance, which I haven't looked at least a couple of weeks, maybe even longer. So here's all those old lines on there. This, you know, it's a little tricky here. What we have really is a double bottom trying to form. So we had this breakdown off of resistance. This wick came up, tested resistance, so that's a bearish retest, right? Bam. And then it came down, but instead of putting in a lower low, so you got high, low, lower, high, instead of putting in a lower low here where this kept going down, it's trying to put in a higher low and trying to turn around. And if it does, if it starts to move back up, especially if it can break this neckline over here, which I would actually be counting the close right here, be clear, right there is what I would consider the neckline. If it can break and close by that neckline, then what you have is a textbook double bottom, which is a reversal signal that would be a bad sign for altcoins, right, and a good sign for Bitcoin as far as Bitcoin pairs go. So that might be a sign that, you know, you might look at some of your positions and decide if you want to move out of the alt back into Bitcoin, etc. But yeah, this could go either way. You know, it looks like a higher low being formed, but it struggled a whole lot. This is a weekly chart. Struggled a whole lot this last week to really do much. So this could just end up dumping further down. So have to wait and see. Okay. But bottom line is this: if Bitcoin is getting ready to crash, you know, and alts are looking weak versus Bitcoin, you know, if you have alts losing value versus Bitcoin while Bitcoin is losing value versus the US dollar, not a great sign. All right. So anyway, I hope you guys enjoyed this. I want to do a video, talk about a few different charts today because I've been talking mainly about the Bitcoin chart. So I want to show you like a total market cap view. I want to show you like a dominance type of view, altcoin view, and all that kind of good stuff. And kind of get outside of the zone a little bit. Make sure you keep in mind, which chart is this? Make sure you do keep in mind what these stock markets are looking like right now. You know, obviously they're not the end all be all, but you know, we all know what a bubble looks like, and this certainly looks like, you know, the great. Are you kidding me? I've clicked that twice, 3 times. All right, this certainly does look like the .com bubble, not the .com bubble. Jeez Louise, the Great Depression bubble, right? You got the M and then the move up, basically. Not really an M, but you know what I mean. Kind of same deal here, right? So that's very similar. And then, of course, if you look at the stock market, the S&P 500, which is the SPX, same deal, right? Even if we don't get a huge 90% crash, which hopefully we don't, I don't want it to crash that bad. Even if we don't get a 90% crash, I do look at this area down around 1550 as being, you know, the legitimate area of support on this thing. You know, it was the resistance level all through here in 2000. It was resistance level in the next bubble in 2008, right? So that was like the stopping point for the last 2 major bubbles. And so, yeah, I do think it's possible this thing is going to bounce back up and then eventually come down and at least tag this level. And you do have to remember that the stock market moves a lot slower than crypto. In crypto, we're used to things playing out over a couple of weeks or a couple of months. It's entirely possible that the Fed does everything it can to keep this propped up all the way through the election in November, right? Trump wants to obviously be reelected, and it's going to help his campaign. And please don't leave political comments. I'm not going to talk politics. It's ridiculous. People are way too passionate about it. It just leads nowhere good. So I'm not going to say who I support and don't support. I don't care about politics. I'll just tell you guys that a long time ago I decided I was going to focus on the things in my world that I could personally change. And those are the things I focus on. The stuff I can't change, I just don't even worry about it, right? And I can't change what Trump is doing in the office, just like I can't change who is in office. I can place my vote every 4 years, and that's what I can do. So I'm not gonna, after somebody's elected or not elected, I'm not going to sit and cry about it for 4 years. Okay, it does no good. But they could do everything in their power to keep this thing propped up through the election, and it might be after he's reelected when this thing finally dumps down, which means that you're talking 7 months down the road. Okay, 8 months, 9 months, a year down the road. Stock market does not move on our time. It moves at its own pace, and it's very slow. When you see these things, it's like, okay, well, that was pretty quick. But you have to remember, this is a monthly chart. Okay, monthly. So if you look at this, and we measure the date range from the top in 2000 to the bottom was 31 months. From the top in 2007 to the bottom in 2009 was 17 months. Not days, not weeks, months. You're talking 2.5 years. You're talking almost a year and a half. So if you're expecting this to go up 1 month and then just boop and give you what you want, probably not going to happen. Okay, could, but patience is a virtue. So, all right, I'm gonna go ahead and wrap up there, guys. Make sure you remember that I am literally just some guy sitting in a spare bedroom. So nothing in this video is financial advice. Nothing in this video is trade advice. You should always do your own due diligence and seek out professional investment advice from a licensed financial advisor before making any type of investment in cryptocurrency or the stock market. If you haven't already, make sure you hit that thumbs up button on this video. Make sure you subscribe to the channel, and make sure you check the description for a link to the Patreon where you can support the channel and also get access to more frequent updates. This is James with Crypto Common Sense, reminding you to please trade safe.